Smell that? It's the aroma of Traeger, the trailblazer of wood pellet grilling. Except we're talking about its business and stock, covering what's cooking, from the company's background and strategy to navigate tough times when grilling season isn't hot. Since 1987, this grillmaster's cultivated a passionate community called the Traegerhood, which spans from casual grillers to professional chefs, bonded together from their love of using all-natural hardwoods to do everything from grilling to smoking and baking. Traeger reaches cooks of all levels because of its versatile, easy-to-use grills that deliver wood-fired flavor, unmatched by gas or charcoal. To stay relevant, it's implemented technology like IoT-enabled grills that connect to the Traeger app, allowing users to control and monitor their grills remotely. Primary products include a range of wood pellet grills, accessories, and consumables like pellets, rubs, and sauces. Their grills are designed for performance and consistency, featuring technologies like Wi-Fi, another remote control feature via its app, Turbo Temp, allowing for fast startup, and Super Smoke Mode. Taking things a step further, Traeger's platform also has digital content, recipes, and cooking classes. Customers are reached through both retail and direct-to-consumer sales, with products available at major retailers like Home Depot and Amazon, as well as through its website and app. With U.S. grill ownership at 76 million households, Traeger's penetration remains low, presenting significant growth opportunities. Traeger's integrated platform drives brand loyalty and recurring revenue, fostering a community of users who continually engage with the brand through its products and digital content. Its supply chain is efficient, scalable, and global, focusing on cost reduction and product improvement, mainly by using third-party manufacturers in China and Vietnam for grills and accessories, and operating 5 U.S.-based wood pellet production facilities. Vertically integrated pellet production ensures quality control and supply consistency, with facilities located near hardwood inputs and distribution centers. The supply chain is also supported by logistics partners across the U.S. and internationally, including in Europe and Canada. Traeger's internal supply chain team coordinates global operations, ensuring product quality, managing suppliers, and overseeing logistics. The team also evaluates new manufacturing capacities to mitigate risks related to geopolitical and economic pressures. To optimize efficiency and scalability, Traeger uses third-party logistics providers for warehousing and distribution, which integrate with its inventory management system. In terms of competition, Traeger faces strong rivalry from established grill brands like Weber, Pit Boss, and new entrants in the outdoor cooking market like griddles and pizza ovens. Additionally, it competes with other wood pellet manufacturers such as Danson's and Bear Mountain Barbecue. Traeger also faces competition in the smart thermometer space after acquiring Action Labs in 2021, where it competes with brands like ThermoPro. Then, as you can imagine, sales are seasonal, with higher demand in the first half of the year as retailers prepare for warmer weather and outdoor cooking events. However, adverse weather conditions can affect sales timing and profitability, leading to fluctuations in quarterly results. A nice segue to get into financials. Starting with its stock, Traeger, with the awesome ticker symbol COOK, received a notice from the New York Stock Exchange on November 19th, informing the company that its stock price has fallen below the minimum $1 per share requirement over a 30-day period. The company now has 6 months to address the deficiency and regain compliance. Traeger plans to pursue remedies, including a potential reverse stock split, subject to board and shareholder approval. However, the notice does not impact Traeger's operations, SEC reporting obligations, or debt compliance, and its stock will continue to trade on the NYSE during the cure period. As of September 30th, Traeger reported liquidity of $167 million, a vital cushion as the company navigates its current challenges. It is focused on executing Project Gravity, a strategic transformation initiative expected to generate $50 million in annualized cost savings. For Q3, Traeger reported revenue of $125.4 million, surpassing expectations, but posted an earnings per share loss of negative 17 cents, missing estimates by a wide margin. However, its adjusted EBITDA increased to $13.8 million, reflecting progress in cost-saving efforts. The company expects full-year revenue between $540 million and $555 million, and adjusted EBITDA between $66 million and $73 million. In line with Project Gravity, steps were taken to make a shift in supply chain strategy, along with increased focus on consumables, which saw 12% growth, as well as continued efforts to mitigate tariff impacts. On the consumer side, Traeger kept up the heat with its offerings, such as its griddle lineup with the launch of the Flatrock 2-Zone griddle, offering a more compact and accessible version of its popular Flatrock 3-Zone. This new griddle features a 2-zone cooking system, providing precise heat control for consistent cooking, whether making breakfast or preparing dishes like fajitas or smash burgers. The Flatrock 2-Zone is designed with wind-blocking technology, efficient U-shaped burners, and an easy clean grease management system for easy cleanup. Its slimmed-down size makes it ideal for smaller spaces while still offering ample cooking space. With a price of $699, the Flatrock 2-Zone is meant to deliver high-quality performance and versatility, making it an excellent choice for those seeking a premium outdoor cooking experience without compromising on space. Launches like this keep Traeger's spot in the outdoor cooking market warm enough as it keeps trying to gather more financial fuel and investor confidence to really turn up the heat in time for the return of grilling season. For more on stocks and crypto, follow Ascencore. See you next time.